I think India's budget unveiled a couple of days ago exactly does that. It takes into account the global economic and political uncertainties, and therefore it does focus on strengthening the domestic demand levers and thereby stoking a supply or investment response, as Lata also put it. The tax cut isn't just a boost to domestic aggregate demand, which of course it is, but more importantly, by creating demand visibility and reducing demand uncertainties, it will also provide an important nudge to the private corporate sector to accelerate its capital spending, and thus be able to offset what Lata put it as a bigger focus on consumption rather than investment demand on the public sector side, which although is not entirely correct, because if you take into account the overall public sector capital expenditure, not just the government of India, but also the public sector enterprises owned by the government of India, and the grants that the government of India is giving to states for capital expenditure, they are treated in the for accounting purposes as revenue expenditure, but they are grants for capital expenditure. If you put them two together, then the growth rate is 19.8 trillion rupees for total capital expenditure in the entire public sector, including grants in aid for capital expenditure, compared to 17 trillion rupees of budgeted expenditure for the current financial year. So there isn't a sacrifice per se, but yes, it is to boost demand and elicit a supply/investment response from the private sector. Back to you.
And as you say, sir, this is a capex to consumption budget. As you mentioned as well, the government, of course, giving big tax breaks to try and boost spending. Massive infrastructure spending, also a key budget focus. But the critics say here that India is missing a chance for deeper reforms, necessary reforms to protect and ensure long-term growth and structural adjustment. Is that the case?
That isn't quite fair, because if you look at the areas of reforms that need to happen, bulk of the reform action in areas like labor, land and buildings, education, health, etc., they're all either in what in India we call the concurrent list, that is joint responsibility of union and state governments, or in some cases, they are entirely in the hands of the state governments. That is why in this budget, the government had announced formation of a high-level deregulation committee to look into various areas of non-financial sector regulation, inspections and compliances, and wants to work with the state governments to build, to dismantle the cumbersome regulatory inspection and compliance framework, making it easier for small and medium enterprises to comply and yet have enough managerial and financial resource bandwidth to concentrate on growing the business, hiring people, etc. So the budget does take into consideration the need to boost the potential growth rate through deeper reforms. And some of the announcements made in the budget, which are dealing with energy security, opening up the atomic energy sector for private sector to participate, etc., they're all definitely deeper reforms. And also in the income tax side, allowing the income tax payers to reopen their returns up to 4 years. So many, and then rationalization of import duties, etc. All these things are indeed reform measures.